Sandler. Alexander, great to have you on. How would you size up the opportunity in residential REITs as the Fed is expected to get more aggressive?
Well, thank you. Here at Piper Sandler on the REIT team, what we're looking at is continued Fed rate action. I think one of your prior guests had highlighted the point that in the early 80s, when Volcker killed inflation, he was 600 basis points above CPI. Right now, the Fed is 600 basis points below. Our focus stocks in residential really are either the Sun Belt or suburban. So you mentioned names like Camden and Mid-America, which have a heavy presence through what are termed the Smile States, sort of DC down to Florida, across Texas to the Southwest. And then Essex, which, while it's California and Washington State, Seattle, it's 90% suburban. So they have been exiting the urban cores that have been hit hard with COVID and the social unrest over the past few years. And Essex had already migrated to the lower cost suburban markets that are still seeing strong demand in parts of California and Seattle around the major work nodes, but without those social pressures and more affordable rents.
As rates rise, do you expect these residential real estate investment trusts to grow their dividend?
Yes. I mean, if you look, and again, you've had a number of guests who have looked back in history at Piper Sandler on the REIT team. We've done the same thing. So we look back in the 70s at the last time we had stagflation. And what's interesting is people forget that in the early 70s recession and the late 70s recession, we had good job growth in both of those recessions. Keep in mind different dynamics, but again, the global economy was not meant to be shut off. It's sort of like Jurassic Park. You know, it's not meant to be turned off, turned back on. And with that, there's a big backlog of not only manufacturing and supply for products that people want, but also jobs. People had a chance during the COVID shutdowns to reevaluate their jobs. What happened is a lot of them decided to leave the gateway areas and move south and to lower cost areas. So when you talk about the next 10 years, the Sun Belt has for the past 20 years, has been outpacing rent growth of the coast. They've been seeing more economic growth, and they've also seen rents that are still affordable. They're under $2,000 a month, whereas, coming from New York, I mean, $2,000 a month, parking spots are almost that much. So the affordability of the Sun Belt can't be overstated. And that's an important driver for earnings and dividend growth.
And also underscores the need as an investor to look at the geographic footprint of these residential REITs to figure out if it's a good buying opportunity over the next 6 to 12 months. Last question on Invitation Homes. I was just noticing that the single-family residential REITs are performing much better than multifamily REITs. Why do you think that is?
Well, we don't cover Invitation Homes, but what I will say, and a key difference that your viewers should remember, is during the housing boom of the 2000s, there were a lot of people, quote unquote, buying homes that couldn't qualify for an apartment. So there are a lot of people out there who need a home, but financially can't afford it. I mean, those of us who are homeowners, there's always something breaking on a home. It's an expensive endeavor.
He's been to my house.
Yes, obviously. Hey, look, we just had our air conditioning redone, and we asked for the local pricing, not the Fairfield County pricing. So, I mean, taking care of a home is very expensive, and there are a lot of people who renting is better. That said, when you look at housing today, people have gone back to the basics. They're living where they want to live for their life. And if they need a home, they're choosing whether to own or buy based on the financial decision that's correct. That's a big difference from the 2000s, where everyone viewed housing as a get-rich-quick scheme. People now know the reality. Yes.
No, it's a great point. We're going to have to leave the conversation there. I think a lot of homeowners can relate, and that's why a lot of people like to rent. They don't like to do all those fixes. Alexander, thank you for your time.
Shepard Smith here. Thanks for watching CNBC on YouTube.